Hi everyone, Michael McKinnon from the District 32 Circle in Swan. I done this presentation a few weeks ago at my local circle on my thoughts on the Perth property market from an investment focused buyer's agent, and it was quite well received, so I thought I'd record it as a webinar and put it out in case anyone's interested. So essentially just to talk a little bit about who Suburbanite are. We are, as I say, buyer's agents that are only focused on working with property investors. We service investors all across Australia. We have clients all across the country, and we also look at markets all across the country. We're also licensed property valuers. I myself was a valuer in Perth for 10 years before I came into this role, and we all still hold our licence with the Australian Property Institute. We're very much strategy focused buyers agents. We understand that property investment essentially just is a tool to achieve a particular financial goal. And one thing I always like to stress is that we don't have any referral fees. We don't take any commissions from any developers. We don't do any house and land packages. We are fully paid for and act for the buyer. Just a bit of a recap and essentially what happened in the Perth market in 2024. It was insane record growth in the market. The Perth Metro median house price rose by 25%. As we stand here today, the median house price is $770,000 with a median rental price of $680 per week. Median selling days is sitting right now around about 13 days, which if you think about a typical property listing on the market, about the Wednesday or the Thursday, probably the first home open that weekend, and a typical negotiation might take 2 to 3 days. So you're probably receiving an offer within about a week from the first home open. Median rental, we're probably seeing within about 15 days a rental has been snapped up. This is what's referred to as the property clock, which Heron Todd White, which is one of the largest mortgage valuation firms in the country, they release this every month based on their internal data as to where they think markets sit on this property clock. When essentially if you think about typical market cycles, they tend to sort of rotate around the clock depending on the particular conditions of the market. In February 2025, they believed that the southwest WA had essentially reached the peak of the market, and they thought Perth was past that rising market stage, beginning to slow down and approaching the peak of the market. However, in March, they now believe that Perth and the southwest is back in a rising market phase. I look at this as an extended break in buyer activity that happened towards the latter end of last year. The market last year was quite crazy, particularly for owner-occupiers that wanted to find their dream or their forever home. You normally find buyer activity tends to slow down in December and then doesn't really pick up until late January. Last year I seen that really drop off mid-November, and it was probably mid-February until after the interest rate cuts that buyer activity really started to amp up. So I think that's where you can see the interpretation of the data appearing as if the market's beginning to slow down. Whereas once they've got the data through from February, they can say actually there's still a lot of activity happening in the Perth market. I also wanted to talk on the supply around the Perth market. For as long as I've been in the industry, a typical equilibrium figure for the Perth property market has been about 12 to 13,000 properties available on the market. They say when it reaches that level, that's a balanced market. It doesn't fall too massively in favour of buyer or too massively in favour of the seller. So this was an article in February 2015 where there was 13,500 properties on the market, a really huge increase from the 9,000 properties they had the year before, and people started to panic because that was the sign that Perth prices were going to start to go in decline, which they did for about the next 5 years really. During that 2014-2015 period, there was a huge exodus of trades from the Perth market. One stat in particular that's quite crazy is from Perth alone, 45,000 people went back to New Zealand, mainly because they lost their job in the resources sector. Whereas as you can see, based on the population from June 2014 to June 2024, we've had about a 16% increase in population in that time. And although listings are increasing, they're not increasing at the same level, and they're absolutely nowhere near that equilibrium level. So although we've had an increase in population, let's take the equilibrium level about 12 to 13,000. So as of Wednesday last week, this was the amount of properties available on the market. So all properties, including land, 5,225 properties available. established dwellings, so that's houses, townhouses, apartments and villas, you had 4,198, and freestanding homes, 3,123. So we're still very far away from that equilibrium level of 12,000 properties available on the market, and that's across all price points. So if you think about what prices are available for buyers under $1 million, you're probably looking at about half of that, those freestanding homes available in that price range. Also looking at where WA sits in comparative to the other states based on the affordability index. So this is data from PropTrack. So if you look at in Western Australia, based on the median household income, 26% of the properties available on the market are accessible. Whereas if you think about Sydney, for example, only 10% of the properties available are accessible to those that earn the median, that have the median income. Then when you also look at the shortfall in new homes, WA is so far down in actually being able to physically build the supply of new homes available for the population that's coming through. In 2024, the forecast for population rise was around 60,000, and we ended up with about 90,000 people coming to WA. The forecast for 2025 is 50,000, so it'll be interesting to see where that lies. But if we've had, over 50% of a shortfall in the last 2 years, even if we meet the number of new homes we need this year, we still have 2 years worth, possibly 3, of new homes to essentially catch up on, which could possibly be expedited more depending on which political party come in the coming weeks. There's also a lot of talk in the market now about the banks beginning to massively lower the interest rates. Some people saying there'll be a 1% drop. Some people saying we'll have 5 rate cuts before the end of the year. So there's a lot of people really starting to hear really credible rumours that there'll be quite significant rate drops over the coming months rather. With all that being said, and with a lot of data indicating how the Perth market is still performing quite strongly, I massively believe that there'll be a bit of a split in the Perth property market. I believe that by the end of this year, the Perth property market will be in what's called a two-tier market. So for anyone who doesn't know, in real estate terms, a two-tier market in real estate occurs when there's a clear divide between different segments of the market, often driven by varying levels of demand, affordability, or buyer demographics. One of the key statistics for me is looking at Lendy's internal data. In 2024, 30% of the Perth metro transactions were a result of interstate investment. I want you to think back mid-2022, where the beginning of this investor wave really sprung into sort of second gear in the Perth market. At that time, with all the information you know in Perth, just think in your head of a particular suburb you thought might have been a good area to invest in. And did you think it would have been one of these suburbs? Armadale in 2024 had growth of 36%. It's grew 85% since 2022. Gosnells, growth of 34% in 2024, 80% since 2022. Aurelia, 30% growth in 2024, 88% since 2022. And Medina, 45% growth in 2024 alone, 90% in 2022. If you think about that typical term of property doubling in value every 10 years, what that looks like is about 7 to 8% growth per annum compounded over 10 years. So some of these suburbs are close to doubling in value in the space of 3 years. But it's important to know why these properties were purchased. As a buyer's agent, you would think I'd put all my clients in these areas, but I haven't. I haven't recommended a property in any of these suburbs to any agents. And the reason why is because it's only investors buying in these areas. That's what I've found anyway. The reason they've been buying them is purely based on affordability. So here's just a few examples of some of the sales in these suburbs in that June 2022 time frame. 2 properties in Armadale and Gosnells, 70s built, really large land components. The one in Armadale below 300,000, the one in Gosnells below 400,000. Probably suspect they both have development potential. The property in Aurelia, a good sized land component on a fairly modern 2004 property. And then that property in Medina, a small land component, but a fairly modern 2015 property. Again, below 350,000. So generally speaking, it's been affordability that's driven the price increases there. What we've seen is people looking at this from outside Perth who don't understand the demographics of the area, don't understand the amenity profile of the area, and just looking at a suburb, its distance to the CBD, the price point, and the rental. That tends to be all the data they're looking at. And what's happened is they've all been competing with each other to purchase the property, which has driven the prices up. But let's go through a scenario with a few where possibly, say, a rent investor on the East Coast couldn't afford to buy in Sydney or Melbourne, so you decided to put your money in WA. What does that look like from your point of view? Let's say you purchased an asset in 2022 at 250,000. Now it's worth 500,000. You made a 100% return. But that's a 100% return on the value of the property. But you didn't pay the full value of the property. You had a 20% deposit of 50,000. You've actually made 500% on your physical money. Now, obviously, there's other costs involved like stamp duty, legal fees, etc., but we'll be very rudimentary on these numbers. On paper, that's an incredible return on your money. But the reality is, the best way to determine a successful investment is the ability to exit. So as I say, the main reason people were buying these properties was based on affordability, and it was investors beginning to compete with themselves. Over the last 6 months, we've seen a huge slowdown in these particular corridors of investors coming into the market. Essentially, it's no longer that affordable, not in comparison to other pockets of Perth anyway. Rents have started to cap in their increase, but prices have still grew, so the rental yield is not as attractive. So what a lot of investors are doing, who possibly in this scenario, are deciding, okay, I want to exit the market. You're now starting to see a huge influx of listings in certain corridors of the market that were dominated by investors. So now investors are competing with each other again, but they're now competing to sell. So they were competing to purchase, and now they're competing to sell. They're competing to exit. However, the reality is that the owner-occupiers in that market are not willing to pay what the paper value is. The paper value has been increased due to demand of affordability. Real value grows through owner-occupier demand because of the amenity and the lifestyle in the area. The reality is that owner-occupiers are choosing to avoid these areas at these price points and go to other suburbs that might be slightly more expensive, but offer much, much more value. So if the investor price or the paper value is here and the owner-occupier price is here, how do investors reach that gap to begin reducing the price? You're really starting to see a lot of properties in these certain corridors massively reduce their price to try and take advantage of whatever owner-occupiers are in that area. So you see these properties in Gosnells and Maddington, they're all saying motivated seller, hot new price, reduced price, etc. And I shared this theory on LinkedIn a few weeks ago, and here's a text message exchange from another buyer's agent, where you can see an agent has essentially dropped 50,000 in the space of a week to try and secure a buyer. This isn't happening across all of Perth, only in certain pockets. On the flip side, here's some examples of where that's not happening. You can see this property in Morley, sold through the wonderful John Williams at the agency, good member of District 32 I might add. He had 8 qualified bidders, 32 offers throughout that bidding process. This final offer stage is from when he marks it as being, okay, give me your final offers, and you can see that that process took an hour. So it was obviously people sitting for an hour trying to compete with each other. A property in Swan View, I unfortunately missed out on it. It was listed for 629. Final offer received was 685,100. 6 buyers and then an additional 7 people actually looking at the property. And then just a text message exchange I had with an agent last week. I missed out on a property in Ellenbrook. I thought I had a good offer forward. It turns out we were the third of 4 offers through. You're also starting to see a lot more of this happening. Properties are marked under offer, home open getting cancelled because an offer's been in, either in the first few days or even before the first home open. None of these areas were the hotspot areas that investor agents were touting. These are the solid areas that people always want to live in. Also really just wanted to give you a bit of an example on the types of properties that we look for clients. Property in Carramar was a bit more of a seasoned investor that wanted to add a good property in Perth to their portfolio. We've got this property in Carramar, late December. A good solid owner-occupier area. We managed to have a tenant through fairly quickly, $800 a week, giving us a 5.4% rental yield. Property in Middle Swan, that was a scenario of someone, it was their very, very first property. Middle Swan's a bit of a sleeper suburb, I would say. It's still very much an owner-occupier dominated area. but it probably will benefit from a lot of future investment in that northern corridor of Midland. 610,000 we paid for it, a tenant through at 600 per week, giving us a 5.1% yield. And then a property up in Alkimos, a good owner-occupier basis in Alkimos. There is a lot more land available, so this was actually something we purchased in someone's super. 720,000 we paid in February 2025, rented for $700 a week, giving us a 5% yield. I finally just wanted to touch on Melbourne as a market. I'm getting a lot of questions about Melbourne. What is the Melbourne market doing? Is it the right time to get into the Melbourne market? I think there's no doubt about it that Melbourne is probably the next capital city to move into that growth phase. But Melbourne is notoriously low rental yields. Also, if I go back to the previous property clock from Heron Todd White in February, that had Melbourne at the very, very start of the recovery. However, in March, with the most recent data, they have that down as a declining market. So I think the start of the year is when a lot of people started to say that Melbourne is the next market, get in quick, the smart money's moving to Melbourne, all these catchphrases. Whereas I think now they're realising that the stable owner-occupier areas haven't begun increasing value yet in Melbourne. Another thing to note, as I say, that Melbourne is notoriously low for rental returns, so it can be very, very costly to hold a property. So this was a cash flow analysis we went through with a client who had a $700,000 budget, and this was based on achieving a 3.5% yield or a 4% yield in Melbourne. Now I think 4% is very optimistic in the Melbourne market. This was on the basis of assuming a 6% interest rate and assuming that you're borrowing 100% of the purchase price plus costs against your principal place of residence on an interest-only payment. So as you can see, even achieving that higher rental of 4%, it actually costs you just over $26,000 per annum to physically hold the asset. Now, holding costs are natural and they're a vital part of property investment if it can be offset by having a property in a growing market. But we don't really think that's the case for Melbourne just yet. This is from CoreLogic's mapping tool, which is a really great tool I'd recommend everyone to have a look at. It gives you a bit of a detailed analysis on what's happening suburb to suburb, and you can see where the values have been over the last 3, 6 or 12 months. So this is essentially the Melbourne market on a 12-monthly basis. So you can see over the last year, there's still some suburbs that have had excess of 5% decline, some that have had above 10% decline, some of them that have even had this sort of stable or 5% decline. But generally speaking, it looks like over a 12-monthly period, there's still been quite a lot of decline in the market. This is how it's looking over the 3-monthly change. So you can see a lot of areas are beginning to stop declining in value, but there's still a lot of areas, particularly the areas in red are more owner-occupier dominated areas, that are still showing quite significant decline over that 3-monthly basis. So for me and the typical clients that we look at, it's probably a little bit early to go into the Melbourne market. We're under no illusion it will be the next market to move into that growth phase, as I say, but for us, we could be looking at least another 12, possibly 18 months before the entire market has really started to move. I'm also very, very cautious that what has happened in Perth might be happening in Melbourne now. Buyers agents in the investment space are a fairly new phenomenon. So a lot of the buyers agents that push clients into Perth and have made a little bit of money could be trying to recycle them into the Melbourne market and essentially increasing the value on paper just with investors competing in themselves. Thank you very much for taking the time to look if you're still here. If you've got any other questions or you want to have a quick call about the market, feel free to give me a call.